So we have discussed till now is about the basics of the GSTR 9 and GSTR 9C. And now we are moving to the issues for the specific for the FI 1890. That is year specific issues of 18 and 19, right? We have seen the structure of the form, right? GSTR 9. So if you observe the form, then there are tables 10 to table 30. These four tables are specifically for the transactions of the current year, but reflected or reported in the GSTR of the next year. So what we have done in the 1718 is, say for example, my total turnover is 1 lakh rupees, and out of this 1 lakh rupees, 90,000 has been reflected in 3B and 1 of the 1718. The 10,000 in its tax amount has been reflected in the GSTR of 3B and 1 of the 1890. So what we have done is in 1718 annual return that we will reflect the 90,000 turnover in part 2, that is table 4, and then 10,000 turnover will reflect in the table 10. So 4 plus 10 will become total 1 lakh rupees turnover, right? So now when we come to the second year or the next year of 1819, again we have table 10 to 13 for the adjustments of the 1819 made in 1920. But what about the adjustments of the previous year done in the current year, right? I have paid the taxes for the transactions of the 1718 in the 1819 and have reflected in the GSTR 3B of 1819. So how will I reflect those amounts? So this is the main issue in the FY 1819 annual return, right? So there are various scenarios in which case the same issue will arise. The same will also applicable for the input tax credit, right? So what we have done is that we have bifurcated the issues in the output tax liabilities, input tax credit, and some other issues. So we will turn by turn take one by one the issues, and in those issues we will take various scenarios. What are the scenarios and what are the possible or probable resolutions for the same? First of all, output tax liabilities. In that case, we will see first scenario 1. Scenario 1 is such that tax sought paid in the 1718, only tax amount has been sought paid. The same has been paid 1819 and reflected in GSTR of 1890. So there is no mismatch of turnover. Say for example, turnover has been properly reflected in 3B, but the tax amount has been reflected less, and accordingly tax has been paid sought, right? The same short payment of tax has been reflected in the GST 3B of the next year. Say for example, April 18, right? And I have paid the tax in the GSTR 3B of April 18, right? Then what will be the consequences of the GST annual return? So here we are not talking about the cases where there was a short payment and I have discharged the liability through DRC 03 channel. If I have discharged the liability through DRC 03 channel, the same will not come over here, right? So here is the case. I have given that in 1718 tax payable was rupees 1000, paid and reflected in 3B of 1718 900 rupees, and 100 rupees I have paid and reflected in 1819 GSTR CD. So what will I do? First of all, what will we have done in the GSTR 9 of 1718, right? In 1718, we would have reflected in table 4 tax liability of rupees 900, right? So actual liability was 1000, but we have discharged the 100 rupees in next year. So in table 4, we will reflect 900. Then table 10, we will reflect 100, which is paid in the next year. And then there was table 14. Table 14 was mainly for the tax payment details on account of table 10 and 11. So again, we have paid tax in the next year. So in table 14 also, there will be 100 rupees reporting. So mostly all people must have done the reporting in such manner. Some may have preferred some other reporting, but this is the ideal way of reporting and we will discuss in this session only. So this is the effect in 1718 GSTR 9. Then how we will reflect the same in the GSTR 9 of 1890. Now for 1819 there is a, say for example, tax liabilities of rupees 1500. So in table 4, we will reflect 1500 only. Even though in GSTR 3B I have paid 1600, but in table 4 I will reflect only 1500. Table 9, tax payable column, it will be 1500 only because my liability in table 4 is 1500. But table 9, tax paid column, it will be auto-populated from the GSTR 3B and non-amendable. So that amount will reflect 1600 because 1500 of 1819 and 100 rupees of 1718. So tax paid will reflect the 1600. So here in GSTR 9 of 2018-19, there will be difference in tax payable and tax paid in table 9 of the GSTR 19. However, the effect is that tax paid is on higher side, so there may not be much issue, but the difference is 100 rupees and the same will be tallied with the reporting of table 10 in previous year, right? So 100 rupees we have reported in table 10 of previous year GSTR 9 and same will be difference over here, right? So in audited cases, we should reflect in the notes to GSTR 9C, we should disclose this working and why there is difference between tax payable and tax paid. We should mention in our notes, or we should make some disclosure in this regards. Now we took another scenario, second scenario. Tax excess paid in 1718, only tax, and the same has been adjusted in 1819 and reflected in 3B of 1819, right? So we are not talking here about the excess paid tax in 1718 and later on claimed as a refund. If the refund has been claimed, the same will not come over here. But in here, I have tax payable in 1718 only 1000 rupees, but by mistake I have paid 1100 rupees in 3B of 1718. So I will adjust the 100 rupees in 1890 liability, right? So how these transactions would have been reflected in 9 of 1718? In table 4, the amount of 1100 would come because I have adjusted 100 rupees in next year. So in table 4, rather than 1000, figure of 1100 would come. Then table 11, reduction in tax liability, 100 rupees will be there. So net liability will be 1000 rupees, which will be tallied with the books of accounts, right? And in table 14, it was just disclosure, it will be minus 100 rupees. Or some may have skipped the reporting table 14 also. Then effect in GSTR 9 of 1819. What we will do in the 1819? And assuming that liability is 1500 rupees in 1819. So in table 4, the figure will 1500 will come. Again in table 9, tax payable will be same 1500. But the tax paid figure, which will be auto-populated from the GSTR 3B, will be rupees 1400. Because in 1819 I have effectively paid 1400 rupees only, and 100 rupees excess payment of the 1718 has been adjusted here. So here there will be difference between tax payable and tax paid, and the difference will be short paid. That is, tax payable is higher side and tax paid is on lower side, right? So this reporting may attract the attention of the portal or authorities directly. So it is always, but there is no solution to this. So we have to live with this, but we should make proper disclosure about this difference, why there is difference of short paid taxes, why there is tax payable is on higher side and why there is tax paid is on lower side. And the difference amount is exactly telling with the table 11 figure of the previous year annual return, right? Then let's take scenario 3. In scenario 1 and 2, we have talked about only tax impact, right? So in scenario 3, we will talk about the entire supply transaction has been missed out, right? There is one invoice of, say for example, 2000 rupees in 1718, which has been missed out in 1718 and reflected in 3B and 1 of the 1890. So these are the facts. In 1718, my total turnover was rupees 20,000 and tax liability 1000. In 1718, I have reflected 18,000 turnover and 900 tax liability, and remaining 2,000 turnover and 100 rupees liability I have discharged and reflected in GST 3B and 1 of the 1890. So in this case, what we will do, in the annual return of the 1718 already filed, we would have disclosed the taxable value of 18,000 and tax of 900 in table 4 because we have discharged the liability on the same. Then taxable value of rupees 2000 and tax of rupees 100 in table 10, right? So table 4 plus 10 will match with my books of accounts. And again in table 14, as I have paid 100 rupees in next year, I will reflect 100 rupees of tax payment in table 14. So this is all about the reporting in last year annual return. Now what we will do in the current year, FY 18-19 annual return. Assuming that there is a, in 18-19, there is a taxable value of 30,000 and tax liability of 1500. So table 4 will report taxable value of 30,000 and tax of rupees 1500 only, right? Even though I have reported 1 and 3B turnover rupees 2000 additional, so they, by becoming it becomes 32,000 turnover, 30,000 plus 2000. But in table 4, it will be reflected only 30,000 turnover and 1500 tax liability. Further, in GSTR 1, though I have reported the transactions of the 17-18 and 18-19, the auto-populated GSTR 9 fetches only transactions of 18-19. So there is one invoice of March 18 which has been reported in April 18. That same will not be fetched under the table 4 of the GSTR 9. So in table 4 of the GSTR 9, the turnover and liability of 18-19 only will be reflected, that is 30,000 and 1500. Now table 9 tax payable is again 1500, but table 9 tax paid will be 1600 because we have paid 100 rupees of earlier in this current year. So again there will be difference between tax payable and tax paid, and which we should disclose in the notes or make some proper disclosure somewhere else, right? And same scenario for the sales return, that is credit note, missed out in 17. So I have recorded all my sales invoices in GSTR 3B and 1 of 17-18. But there is one credit note for the sales return which I have missed out in GST return of the 17-18. Such credit note has been reflected in the GST return of 18-19. So these are the facts. Taxable value 20,000 and tax 1,000. Sales return was 2,000 and tax was the same, was 100 rupees. But same has not been reflected in 17-18 and it has been reflected in 18-19. So first of all, what would I have done in the annual return of 17-18? In table 4, I will reflect taxable value of 20,000 and tax of rupees 1,000. While in table 11, I would reduce the liability by reflecting taxable value of rupees 2,000 and tax of rupees 100, because it is reduction in tax liability reflected in the next year, right? So table 4 and 11 net of will be tallied with my books of account. Now what will I do in the GSTR 9 of FY 18-19, right? In GSTR 9 of the FY 18-19, in table 4, my amount will be 30,000 turnover and 1500 tax. There is no change. Table 9 tax payable will be 1500 only, but table 9 tax paid 1400. So again, there is a short payment of 100 rupees is per table 9 of the GSTR 9, but there is actual no short payment. So again, we have to make proper disclosure that there is 100 difference of 100 rupees is on account of the earlier year tax adjustment, and it tallies with the table 11 of the previous year annual return, right? So these are the 4 scenarios regarding the output tax liabilities which may arise in the 18-19, and we are supposed to make proper disclosure, so it may be helpful at the time of assessment or any other proceedings. Otherwise this table 9 will reflect the difference and it will be difficult to give answers at the time of proceedings. So now likewise outward tax liability, we see the various scenarios under the input tax credit. What will happen in the cases of the input tax credit? In the input tax credit scenario 1, ITC of 17-18 availed in the 18-19. Simple case, there was the ITC of 1000 rupees in 17-18, availed in 17-18 is 900 rupees, while balance 100 rupees has been availed in 18-19. First we'll see what was the reporting in the 9 of 17-18. We must have filed the 9 of the 17-18. In that case, how we have reflected the same. Table 6A, we would have auto-populated figure would have been 900. In table 6B, bifurcation would be 900, assuming all the credit falls under the 6B and not 6C to 6H, right? So 6B will be 900, and table 13, I would have reflected 100 rupees, that is credit taken in the next year. So 6 plus 13 becomes 1000 and it tallies with my books of account. right? Now what we will do in the current year FY 18-19 return. So here I have discussed two options regarding, but in our opinion, option one is always advisable and option one is more proper. Why? That we will discuss later on. Option one, how we will reflect in the 18-19 annual return. First, assuming that 18-19 ITC is 1500 rupees, right? But the table 6A auto-populated figure will be reflected as a 1600. 1500 ITC of 18-19 plus 100 rupees ITC of 17-18 taken in the 3B of 18-19. So 6A will come as a 1600. Now what I will do is I will reflect bifurcate only 1500 under the table 6B, right? So if I reflect 6B as a 1500 only, then there will be difference in 6J. The 6J is for the difference between 6A and 6B to 6H. So table 6J, there will be difference of rupees 100 rupees, right? I will reflect the 100 rupees of previous year credit under the table 6M. Table 6M is regarding any other ITC. So here I will prefer to report 100 rupees ITC of 17-18 under the table 6M, right? And so my total credit as per 6O becomes 1600, right? Here the advantage would be now in table 8 comparison ITC as per GSTR 2A, assuming that all ITC has been reflected in GSTR 2A. So ITC as per 2A will be 1500. In 8B, the figure will go from the 6B. So in 6B, I have reported 1500 only. So in 8B also it will be come as a 1500. So here 1500 will be matched with 1500 and there will be no difference in 8B, right? So this is about the GSTR 9 and how we will reflect in GSTR 9C. 9C there will not be much issue because in 9C I will say that table 12A ITCS per books is 1500. In 9C I have column for both the adjustments, booked in previous year and claimed in current year, or booked in current year and claimed in next year. So I have both the adjustments, so I will reflect 100 rupees under the column 12B, ITC booked in previous year and claimed in current year. So total ITC will become 1600 and that 1600 will be matched with the 1600 of GSTR 9. So there will be no issue in the GSTR 9C, right? But here, if we take second option, right? Many people prefer second option that 1600 ITC will be reflected under 6B only, right? 6A reflects auto-populated figure of 1600, 1500 of 18-19 plus 100 of 17-18. So if I will reflect entire 1600 under the 6B, then there will be no difference in 6J, right? But in table 8, it will go as a 1600. So now in table 8, what happens? ITC as per 2A is 1500, but ITC as per the 6B is 1600. So there will be difference of negative difference of rupees 100, right? So if we report everything under the 6B, then there are chances that in the table 8 there will be negative difference in comparison with 2A, right? So always it is advisable that in ITC cases we reflect ITC of the 17-18 taken in the 18-19 under the table 6M, any other ITC. That will the best, or one can say most preferable solution, right? And as we discussed 9C, there will be no much impact, we have already discussed. Now with reference to ITC, we take the second scenario in which I have made ITC reversal in the next year, right? I have availed ITC in 17-18. In books of account, I have made reversal in 17-18, but in GST return, I have made reversal in the next year. Say, for example, I have availed 1000 rupees ITC in 17-18, availed in 17-18 1000 rupees, reversed in 18-19 100 rupees. So my net ITC for 17-18 was rupees 900 only, but I have reversed 100 rupees in 18-19. So first of all, what I would have done in the 9 of the 17-18, table 6A will be auto-populated 1000 rupees. So I have given bifurcation also in 6B of 1000 rupees. Then table 12, that is for ITC reversal in next year, I would refer 100 rupees. So when I net off the table 6 with table 12, my net ITC availed will be rupees 900, which will be matched with the books of accounts. So in 17-18, I would have made this disclosure. Now let's come to the what will we do in the 1819 GSTR 9, right? So assuming same 1819 ITC is 1500 rupees, right? So table 6A will give me auto population of 1500 because ITC is 1500 also only in this year. 6B will be 1500, so there is no difference in 6J. Now in table 7, specifically table 7I, there will be total reversal of rupees 100. This reversal is pertaining to 1718, but it will be reflected in table 7 because I have reflected in table GSTR 3B of the 1890. So net ITC as per 7J would be 1400 rupees, right? Now there will be no issue in comparison in table 8 because it will compare 1500 with the 1500, so there will be no difference. But here the issue will arise in the case of GSTR 9C, table 12, right? Let's see. In the table 12A, ITC is for books 1500, right? Table 12B and C's are for the ITC's adjustments of previous year done in current year or ITC adjustment of current year done in next year. But 12B and C talks only about the ITC. They don't talk about the ITC reversal, right? So there is no scope for reporting of the ITC reversal in 12B and 12C. So result would be ITCS for books of account 1500, but ITCS for annual return would be 1400. See here there will be 100 rupees unreconciled ITC, right? But same I need to make proper disclosure in notes that why this is a difference of 100 rupees, right? And there is no scope for reporting reversal of ITC in 12B or 12C. So there is a difference of 100 rupees in table 12 of the GSTR 9C, right? So we have discussed the output tax liabilities and input tax credit various scenarios which may arise in FY 1819. And now last 2 points, TDS TCS and e-way bill. First we will see at the TDS TCS. As we all know that TDS and TCS provisions have been made effective in the mid of the FY 1819, right? So one can say there is no direct impact of the TDS and TCS on the GSTR 9 or GSTR 9C because it will be the forming part of your cash ledger and you can utilize the same towards the cash payment, right? So it is directly not affecting GSTR 9 or GSTR 9C. But what point we should consider in while exercising or doing GST audit, and how to make reconciliation of the figures of the TDS or TCS, right? So it is advisable that we just look at the amount and the transactions mentioned under the table of TDS and TCS and compare with the turnover of the registered person, right? So by mistake we have not accepted the TDS or TCS pertaining to some other person, right? So ideally the transactions under the tab of TDS and TCS should match with the turnover in our books of accounts. Broadly we should make reconciliation and comparison of the TDS TCS with our books of accounts, right? And now the last topic, e-way bill. As we all know that e-way bill for most of the movement was made mandatory in the 1819. In 1718 we may not have the much issues about the e-way bill, but in 1819 most of the movement are covered under the e-way bill provisions, right? Further, there were some state-wise different relaxations in different states, right? In Gujarat we have certain relaxation for certain items that e-way bill are not required for those items. E-way bill are not required for the intra-city movement. So there are different provisions in the different states for regarding the e-way bill, right? Further, it may happen that e-way bill prepared, but not only for the supply, right? But e-way bills are prepared for all kinds of the movement of the goods, right? So even though there is no supply or there is no sale transactions, e-way bill would have been prepaid. So when you compare the e-way bill data, there will be many transactions which are not supply, right? So we need to keep in mind that also. And here we will discuss what is the importance of the e-way bill data for the GST audit, right? What extent we should compare the e-way bill data, to what extent we should rely on the e-way bill data, to what extent, if there is a difference, we should report, and what steps or what consequences would follow if the EVA bill provisions are not followed, right? So we will see what are the impact of the EVA bill under the GST audit. We will see with reference to outward supply and then with reference to inward supplies, right? So it is important to have the abstract of the EVA bill data, right? Now we can have the abstract of the EVA bill data from the EVA bill portal. But here the main problem is that EVA bill portal gives the data of 5 days at a time, right? So we cannot get yearly data at a single click. Then we can access only 5 days data at a time. So for if we want to get the EVA bill data for entire year, we have to rerun cycles so many times. So it will be difficult, right? Now option to that would be the extract the EVA bill data from the GSTR1, right? In GSTR1 also, in B2B supplies tab, we have import EVA bill data option, right? So from that tab, I can import the EVA bill data, though this EVA bill data will be only with reference to supply transactions and not other than supply transactions, right? So if there is an EVA bill for the repair movement or job work movement, it may not be reflected in B2B supply, but my all sales transactions, supply transactions, EVA bill data will be easily available from the GSTR1, right? So this abstracting EVA bill data from GSTR1 would be good option compared to the abstracting EVA bill data from the EVA bill portal. However, at current, some of the software, GST softwares provide facility to abstract the entire year data at a one click from the EVA bill portal, but normally it is not possible. Now, after abstracting this EVA bill data, we should make reconciliation of the EVA bill data with the GSTR and books of accounts, right? So whether we need to find out whether for all the transactions for which EVA bill required to be issued, whether it has been properly issued or not, whether any transactions without issuing EVA bill, right? And as we all know, there will be many differences between the EVA bill data and the GST data. Some of the possible reasons for such difference would be basic threshold of rupees 50,000. So if my supply transaction is only for 20,000, there will be no EVA bill, right? Then job work activity or no supply movement. I have to send goods for the job work. I have sent goods for the repair, etc. Will not be for this transaction. EVA bill would have been generated, but the same has not been reflected as a supply in the GSTR 1 or 3B. Then supply of services are not covered in the EVA bill. Then bill to ship to transactions. In such transaction, there will be two sales invoices, but their EVA will be only one. So it may not match with the sales invoices. Then in many cases, multiple EVA bill for the single invoices. I would have prepared the multiple EVA bill for single invoices. In all such cases, the data of the GST returns and the EVA bill data would not match. But we should keep aside these differences. Ideally we should focus on the supply data only, whether all supply or sales transactions, whether the EVA bill provisions are duly complied with or not. Right? If there are violations of the EVA bill provisions, we need to see what are the consequences and how we can report the same. Right? So this is about the outward supply with reference to EVA bill data, and now inward supplies, right? So reconciliation of inward supplies with the inward EVA bill data. We can get inward EVA bill data from the EVA bill portal, but again the issue is inward EVA bill data from the portal is available only for the 5 days, right? So here it will be issue to download the EVA bill data from the EVA bill portal. Now I have downloaded the EVA bill data, and I found out that the some of the goods are received without EVA bill. Then what would be the consequences, right? I am the recipient of the goods. The EVA bill issuance is the responsibility of my supplier and not my responsibility, right? So in that case, if I have received the goods and I can demonstrate through some delivery channels or consignment note that I have received the goods and I have invoices, that will be sufficient, and it cannot be said it is default on my part. Now reverse case, what if there is an inward EVA bill data but there is no inward supply, right? there is the e-way bill data for my inward supply, but the same has not been there in the books of accounts or GST returns. Then what will be done? Then we need to find out the reasons why such mismatch. There is a mistake by the supplier in uploading the e-way bill data or some any other reasons. And based on such reasons, we need to find out the resolutions for the same, right? So this is all about the e-way bill data that we should consider while doing the GSTR 9 and GSTR 9C and specifically GST audit. So that's all from my side on this topic. I thank you, all of you, for your patience hearing. For any query, you can contact me at any time. I have given my email ID on the screen. You can contact me for any query. Thank you. And at the last, let's all pray for the well-being of humankind, and let's pray that we come out of this COVID-19 situation as early as possible. Stay home, stay safe. Thank you. Thank you so much.